Hi, everyone. I have to admit that this was easily the most disappointing week of 2014. And what's very funny about that is that next week, or as we go into Monday, it is officially the worst week of the year historically for stocks. Going back 180 years, this is the worst week coming up. So invest accordingly. This is why I continue to have some hedge on with my SQQ, and why I continue to have a hedge on with the Russell 2000. The Russell 2000 is rebroken back below the 5200-day moving average, and I repeat, I do not see how this ends well. I just do not. However, our stocks are just making me look foolish. I have to admit, I've made critical trading mistakes on Monday. Did not make them the rest of the week, but on Monday, I tell you what, I just thought the market, because we were going from overbought, we had so many people that were bullish short term and with the bears at 1987 lows that we had to crack. And I fully sold out Facebook, which immediately has made me look dumb. The past 4 days, it has recaptured all of those losses, and Twitter was another full sell that has recaptured all of its losses. On top of that, throughout the week, my limit order missed on MVGS. Got a bad fill on Friday on EQIX. That's why that's a 33% sell, or else it probably wouldn't be a sell. And then EMC also is a 25% sell. Without the gap up and poor fill, probably wouldn't be a sell either. Also, on top of that, I do have some. Let's go ahead and just go over the clerical sell signals. WWAV is closing below its 10-day moving average on above average volume with my oscillators showing negative conditions, TSV, MACD. So that is a 20% sell. OTEX is closing below its 20-day moving average. If volume would have been above average, would have been 50%. I'm going to follow my signals, and so this is only a 25% sell. But that's breaking down below key support and everything, so I really don't like the way that looks. AAP, scared trader, 100% sell. Me, I'm going to go ahead and just make it 50% because the 50-day, it's still holding the 50-day moving average. We still have small gains, so there's no need for a full sell. With my commission so low, it just doesn't make sense. For those with small accounts, obviously, whenever you do go long, you have to make your own decision on that. But I would recommend, if you do have that kind of condition and you are long AAP, it's a full sell here, because this is a significant breakdown with the oscillator showing quite a bearish condition. And then ILMN, wow, what a failure. How many times has this stock gotten me? More than enough. More than enough. So ILMN has faked me once again, culminating in a very poor week. So those are the sells on Monday. Now, overall, SQQQ still looks good overall with the QQQ reversing on heavy volume. I have a big problem still with this market. You can see our oscillators are still heading down on the QQQ, still heading down on the NASDAQ, not bouncing at all, oversold. Same with the Russell 2000, same with the IWN, same with the SPY, same with the S&P 500, same with the Dow Jones Industrial Average and its ETF, the DIA. You can see that we have the exact same setup on every single pattern. At the weird end of this, there, look at the Dow Jones Industrial Average, third day in a row, pocket pivot 1, 2, 3, pocket pivot point buy signals in a row. So quite an odd market. And like I said earlier this week, if you want to see a market that a new trader should not trade, it's this one. I wouldn't be ashamed to be on cash here. However, recent longs that we just got shaken out too, GBX. So we went into GBX here. 69.52 should have been my first cut loss level. Closed below that. Closed below 69.41 by closing at 69.01, so I fully sold it. I found support immediately and then look at it rally higher. Like I said, a very difficult market. Mistakes have been made, but only small, damage. It could be much worse. The disappointing thing is that I've taken off stocks that have now produced better gains, and I just left a ton of money on the table. And due to some poor fills recently on some longs, and with the SQQ getting a terrible fill in the morning on Friday, I've lost money where I shouldn't have lost money. I should have used limit orders on EMC and EQIX. That's what I did the day before, and that's what I'll be doing with my new long position on Monday. So just some key mistakes. Very, 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 very bad week for me. Day trading continues to kill it. I know somebody they day traded CNET breakout on the Alibaba IPO. Remember, it's 3:30 in the morning, 4 a.m. on Maui, and I'm not willing to change. But they gave a call at right around as it was breaking out above 125 to 130, and this thing rallied all the way to 270. Could have doubled your money intraday on, I think it was about an hour, 2 hours. I'm not going to pull up the intraday chart. I don't even want to look at it. It's been a rough week. But the bottom line is that intraday is where most of the gains remain, these end-of-day trend following signals. It's just a choppy market with just not everything lined up. I mean, there is no fear out there. The VIX still shows no fear. But at the same time, it doesn't look horrible, so we could easily just continue to pull back, find support 50-day moving average, and rally higher. So I'll just continue to be careful. And now, due to my screw up not doing limit orders on Equix and EMC, which I made 5%ers, I'm now punishing myself. So new long positions, high quality, are only going to be 2.5%. Low quality, 1%. I can afford to do this. If you can't afford to do this, you don't do the trades. Or if you do the trades, you do the normal 5-10% that you feel comfortable doing. Never making one single trade more than 20% of your account capital. Anything can happen. It's just too dangerous. We can't all be Dan Zanger and or all be Tim Sykes and have a little bit of momentum with your intraday alerts like he does. I mean, it's not the only way he makes money, but obviously it helps. But EQM is a new long position. Pocket pivot point signal right as it finds support right below its 50-day moving average, which is higher support than the August support. High quality can slim stock, excellent ratings, excellent fundamentals. And while this stock is right now not in my perfect speculator scan, once it gets back above the 50-day moving average, it will have the 100% gain over the past year, which will put it in my perfect speculator scan. So I will consider this a good perfect speculator scan situation also. But the moving averages, MACD and TSV looks like it may have bottomed short term, so that is good news. MACD looks like it's trying to start to maybe round out at the bottom, but still it's not oversold compared to the last time, so it might not work. If that is the case, final cut loss below 89.18. You can use some of these other days here if you're really brave, including all the way back to 87.03. But no matter what, you should not be this long the stock if it gets below 87.03. 87.02 should be your final stop. So that's going to be it for me. That's it. One long position. Going to hold on to the rest of my SQQQ hedge and my SRTY hedge. Expecting next week should be a rough week, but I'm sure individual stocks will work good. Crazy market here, guys. Seriously, be careful. This is not the market to be a hero in. Aloha.